Welcome to the WTR On the Horizon podcast. I'm your host, Tim Gerdeman, Vice Chair and Co-founder and Chief Marketing Officer of Water Tower Research. Today we're joined by Gary Atkinson, CEO and Chairman of Algorhythm Holdings, NASDAQ ticker symbol RIME. Algorhythm Holdings is an AI technology holding company focused on disrupting freight logistics through its SemiCab platform. SemiCab uses AI-driven collaborative optimization to reduce empty truck miles, a huge problem that costs the global trucking industry over 1 trillion annually. The company operates managed freight services in India for major multinational CPG companies and recently launched APEX, a SaaS logistics platform targeting the US and global markets. Also joining is my WTR Technology Equity Research colleague, James Kisner. Good morning, gentlemen, and thank you for joining me.
Right.
Good morning, Tim. Thanks for having me. It's a pleasure to be here.
So, Gary, to kick things off, Algorythm has gone through quite a transformation of late. I know you sold the legacy singing machine karaoke business last year and are now fully focused on SemiCab. For listeners who are new to the story, can you please give us the elevator pitch on what SemiCab does and why you're so excited about that business line?
Yeah, no, absolutely. So I think for the new listeners particularly, it's probably helpful to hear the problem first, and once they hear the problem, it'll be much easier to understand sort of what we're doing and why we think we're disruptive to the traditional trucking transportation industry. So just to start with some numbers, the global trucking industry is massive, right? It's basically the backbone of the world's economies, and it's forecasted to be anywhere roughly about $3 trillion a year in global annual spend. And right now, today, and this might be surprising to a lot of your listeners, right now in 2026, approximately 1 out of every 3 miles that a truck drives is being driven empty, which is it's astounding to us. And so another way of thinking about that is out of the 3 trillion a year annual spend on global trucking, roughly about 1 trillion of that is essentially sort of waste and inefficiency that's systemic to the current system. And what does that waste look like? So it looks like um, unnecessary fuel spend, right? And particularly with today's environment, with oil prices being in all the news, um, this $1 trillion of waste and efficiency, it's wasted fuel, it's unnecessary CO2 emission, it's unnecessary labor for the truck drivers themselves, the depreciation of the actual trucking asset itself. And then at the end of the day, it's congestion. It's unnecessary truck congestion that's impacting our roads here in America and across the world. So SemiCab we've developed technology to essentially solve this empty miles problem. And what we do is we have what we call a multi-enterprise collaborative network that we've developed and built. It's essentially a software platform. And what we do is we look for ways to optimize the trucking trips that these trucks move on. And we're sort of thinking about the problem from a completely different perspective than what the traditional freight brokers and what the industry is doing today.
Great. That's a really interesting introduction and business. With that, I'll turn it over to James to ask a few questions, Gary.
All right. Thanks, Tim. So, again, you just kind of hit on the core problem SemiCab is solving here. I'm hoping maybe you can double click a little bit and maybe kind of just walk us through how the platform actually works in practice. Maybe drill down a little more on how it is different from the traditional digital freight broker.
Sure. Yeah, that's a great question, James. So if you think about traditional freight brokerage, it's been around for 100 years. You got the big players like C.H. Robinson. And then sort of recently, within the last 10 years, you've seen these new digital freight broker companies that have come out. So these are guys like Convoy, recently Uber Freight would be another large digital freight broker. And what these guys all do at the end of the day, like the model really hasn't changed in 100 years. It's essentially looking at freight as a series of one-off transactions. So an example for you would be, let's say I'm a shipper and I have a truckload of goods that need to move from Dallas to Chicago. That load is a one-off load that starts at point A and ends in point B. And nobody today is really thinking about where's that truck going once they've dropped off its load up in Chicago. And so when you look at freight as just a series of one-off transactions from point A to point B, you start running into problems. And that's where this empty miles problem is really sort of taken root, is these one-off transactions, they sort of lead to inefficiencies within a network. They lead to assets that get stranded in areas where supply and demand aren't really in line with each other. And so what we do differently, the way we think about freight, is we don't look at freight as a movement from point A to point B. We're looking at freight from sort of the mindset of continual truck movements, or so continual flows is sort of the way we think about freight. And so what does that really mean? We're not looking to execute a load from point A to point B. What our platform is trained to do is we look for continuous movements that will bring a truck from point A to B, B to C, and then C right back to A. And that's really the heart, I guess, in a nutshell, of what our AI engine is doing. There's sort of three prongs to it. There's the forecasting and planning part of it. Then there's the optimization part, and then there's the execution part. And I think really sort of the heart of it is the forecasting and the planning. So we're able to see, like traditional freight brokers, they're really only planning out a day, maybe 2 days in advance. We're looking out a week plus in advance when we're building our continual flows or our trips. And so what we're doing is we're actually predicting loads before they even exist, because we're able to look at history and we're able to say, hey, okay, this distribution center, every Monday, there's always historically been a load that has come out of there. So when we're looking and we're building these continual movements, let's go ahead and pencil in that distribution center is going to have a load ready for pickup come Monday. And so it's sort of like a massive, jigsaw puzzle or a massive math problem, where the system is planning, predicting, building trips around what it sees, and then also having this all of these contingency plans that are being built in the background. So if that load that was forecasted to come on a Monday doesn't actually materialize, we've got tens of thousands of backup permutations that the system can then execute on automatically or autonomously without any human intervention to be able to keep that truck moving. And I think that's really the core of what we're doing differently, is we built a platform from the perspective or from first principles as the truck itself. Like, we're always worrying about where's that truck going next, as opposed to thinking about freight as just a series of one-off transactions.
All right, thank you for that deep dive. That's really helpful. Let's talk about recent results. So I think you had almost $10 million in annualized revenue run rate in December, and that was up 300% year over year. And you also disclosed that you've been awarded about 15 million in annual freight contracts. So can you kind of just talk about your momentum, in early 2006, and perhaps how the National Digital Freight Exchange is perhaps fueling that acceleration?
Yeah, so 2026 has been a pretty interesting year for us so far. I remember back in January of this year, we went to a trade show, and we were there to do demos of our SemiCab platform, and we were talking to industry about our sort of multi-enterprise collaborative model. And I think what is important to understand is we were sort of operating for the last few years in pretty general obscurity. There were not a lot of people that knew what we were doing. I think that the concept behind our platform, a lot of people in the industry were thinking, well, this is too theoretical, right? This is never going to work. That was always the pushback that we would get. And then you kind of fast forward to now, and we're really starting to see a big shift in the way that industry is talking about and thinking about freight, and particularly what that next step change is going to be in terms of freight technology. And so I'm starting to see now a lot of people that are embracing this concept of a multi-enterprise network model. And I think that's probably one of the more exciting things that we've been seeing this year so far. Obviously for many who haven't seen us in the news recently, we kind of had our viral moment last month back in February, where we sort of were credited with, or maybe discredited would be the better terminology, with causing a $20 billion market wipeout in all of the large trucking and transportation companies. And what the media was portraying is that it was really as a result of our SemiCab platform being this sort of AI new disruptive technology. And based on all of the media attention and industry awareness, we've really been able to supercharge our business development cycle this year. So I'm really excited about kind of where we are, where I see the technology heading towards. I think we're at the perfect time where the industry is going to be embracing our multi-enterprise model. So for 2026 and beyond, I think we're in a really good spot.
That sounds like you got a lot of momentum. So you guys are working with some pretty large names. Procter and Gamble, Kellanova India, the former Kellogg subsidiary, Hindustan Unilever, Asian Paints, Apollo Tires. I think in the last month you also had MTR Foods and have a pilot with Coca-Cola India. So kudos to you. Just how are these land and expand strategies evolving, and what does it tell us about the scalability of the SemiCab platform?
Yeah, so in our primary growth driver right now is what we call our managed services business, and that's primarily operating out of India. And you're absolutely correct. I mean, we've been absolutely thrilled with the name and the caliber of these sort of Fortune 500 shippers that have been coming onto our network. And what I'll say is that it truly is a network effect business model. And what I mean by that is the more shippers and the more carriers that come onto the network, the better the overall cost structure is for everybody. Like essentially all the participants win, right? Because there's more transactional volume, there's more opportunities for our software to find those types of efficiencies to cut down empty miles. And so we're able to pass along a lot of those cost savings to our customers. And look, it's been working. So we put out a white paper back in February where we talked about some of the results of the kind of real life production data that's coming out of India. And we talked about how we've been able to cut empty miles by up to 70%, which anybody in industry, that's huge. That type of empty mile reduction. I mean, some lanes were able to get empty miles down below 10%. So really, really, really impressive numbers that are coming out of our managed services business in India. And at the same time, what we also proved is that we're actually able to quadruple the amount of loads that we can process through our SemiCab platform without adding any additional headcount whatsoever. And I think that was something that got picked up last month by the media and really kind of kickstarted this AI disruption fear that impacted the rest of the industry. So, the expansions with our customers have been going great. These guys, they all typically like to start on pilot contracts, which is generally, they'll award us one lane or maybe two lanes, not a lot of volume. But I can say that we have not seen yet to date any customer that's come onto the platform that has not come back to us with more lanes, more volume, more business. Like it just proves to me how sticky this service is and how much they love it, because every single case they're coming back to us and they're looking to do more. So really, really excited about where the managed services business can go.
All right, very cool. So you recently launched a SemiCab APEX for the U.S. and global markets. So why is this the right time to push into that $450 billion U.S. full truckload market? And how does the SaaS model, change your margin profile compared to the managed services business?
So So why US? So I mean, US is obviously it's the biggest trucking market in the world. So it makes complete sense for us to be here. You know, we're a publicly traded company here in the US. Our corporate office is here in the US. So it's very, very important for us to have a strong presence here in the US. And in terms of sort of why a technology offering, like a SaaS offering, there's a couple of reasons for that. So number one, we've always from day one wanted to be a technology first company. I think the reason we got into managed services was really because of the fact that we almost needed to prove that the model worked in order to gain acceptance for our SaaS product offering. So we always have wanted to be a technology first company. Um, and obviously from a sort of corporate financial perspective, SaaS has always been a much more desirable model for us. You know, the margins are much better. You know, you're typically looking at, you know, traditional SaaS margins, which are, you know, upwards of 90% gross margin. And it's just a very light, highly scalable model that I think will give any partner that we work with having access to this technology will give them a competitive advantage over all of their other competitors. So it's just always made sense. It's kind of, to be honest, it's where we've wanted to go from the beginning in sort of introducing a technology for SaaS product offering. And the US makes just complete sense for us, given that we're here and so much of the market is here.
Okay, that makes sense. One of the scaling constraints you talked about is truck availability in India. By late 2025, said SemiCab had expanded its fleet to 450 trucks, enough to support more than 23 million annual revenue and fully utilized. So as you work to keep scaling capacity, how are you managing the operational challenges?
That's a great question. And I've said it publicly and I'll say it again. I think the biggest constraint for us to grow our managed services business is what you just indicated, which is having access to trucks, right? And that's the core difference between the managed services model and our SaaS product offering is that within managed services, we're responsible for sourcing and procuring the trucks for our customers. So we operate very much like a virtual carrier. We don't own any trucks, we don't hire any drivers, but we are responsible to source these trucks to pick up the loads on behalf of our customers. And so, like, for instance, lately, our acceptance rate in India for managed services has probably been in the low 70% rate. So we're turning down a lot of potential business simply because we just can't get our hands on enough trucks. And so that's been our biggest constraint. That's from an operational perspective. That's where we're spending most of our energy is trying to enhance the supply side of our carrier network so that we have enough capacity to keep up with all of the demand. And again, it's another reason why I'm so excited about the SaaS product offering that we've launched last year, because that model has no constraint. There's no constraint. We don't need to source trucks. It's really up to the partners that we work with to be able to supply their own infrastructure, their own dedicated fleet, and so that's why I think, you know, we're going all in on that on SaaS. We really want to be a technology first company.
Makes sense. So one other kind of potential constraint for folks is financing. You got a supply chain finance facility for Bank of America, and then you said you're fully funded through 2026 after additional draws on a broader financing facility. Just how should we think about your capital needs and funding sources from here?
Yeah, so great question. I mean, I think most business owners will know that financing working capital can be challenging. You know, you've got situations, particularly in India with managed services. We're doing business with some of the largest, you know, Fortune 500 enterprise companies in the world. They typically pay their suppliers anywhere from 45 to 60 days out. And then on the other side of the coin, we've got small to mid-sized carriers where we have to pay our bills in 30 days. So there's clearly sort of a cash to cash timing breakdown that we need to fund. And so we've got sort of two primary levers that we play with from a non-dilutive financing perspective. We've got a Bank of America financing facility. It's a supply chain financing that we do with Procter and Gamble, and it's a very, very low cost of capital. I think it's Treasury plus 1% to essentially finance the P&G receivables. So that's one lever that we love. We absolutely love that Bank of America facility. The other piece we have to fund working capital is we utilize a service called C2FO, very similar to sort of like a quick pay or prompt pay discount program that a lot of our customers participate in. So we leverage that in India as much as we possibly can. And then at the end of the day, we're a business that is not yet profitable, right? So there's always going to be a gap that we need to fill, and that's primarily done through equity, right? So that's the capital market side of the business. Now, we did announce, I believe it was last month, that we have sufficient working capital to fund the business all the way throughout the rest of 2026, and I stand by that. So we're fully funded. We've got many quarters of runway to continue to run the business, but because we're not yet at the point where the managed services business with the SaaS business is generating free cash flow. It's important for the listeners and the viewers to understand that we do need to continue to raise capital, primarily from equity from the capital markets.
Very helpful perspective. So just one last one here as we wrap up. So you projected SemiCab's annual revenue run rate to reach 15 to 20 million by the end of 26. And so just for investors, as you look ahead, like what are the 2 or 3 key milestones that they should look for, as they track your progress in this year?
Yeah, so we're still very much an early stage business. So I think for us right now, the key milestone that I'm tracking every single week is obviously top line growth, right? We need to grow and expand as a network-based model. It's very, very important that we're continually bringing new customers, new carriers onto the network, because that's where we know we're gonna have that economy of scale, where eventually the model will prove out that we'll be able to generate positive net income from the managed services business once we reach that economy of scale where now every participant on the network is winning, and the way we drive value, the way we drive margin, is when all of our customers are seeing those empty mile reductions. So we're proving it out. We're not there yet, at least from a volume perspective. So I would say the number one thing investors should be looking for is just growth, and that's what we're tracking here internally. The other big milestone that we're also looking for this year is that first big US SaaS customer, right? And that's under our SemiCab APEX product. And that's going to really, I think, be a sort of foundational game changer for the business. It's what will impact the bottom line financials the most, given that the margin structure is so different, right? You're talking about 90% gross margins as opposed to much smaller margins that are coming from the managed services business. And ultimately, that's where we want to be. We want to expand that SaaS product, not just here in the US, but we think around the world, because this empty miles problem, this is not it's not localized to the US or India. This is a global problem. This is something that we can fix all around the world. And so I think we believe we have a product that can suit all the different geographies around the world.
Okay, thanks so much. I really appreciate all those thoughtful answers. I'll hand it back to Tim.
Well, great. Thanks so much for joining me today, Gary and James. For very, very interesting talking about Algorhythm Holdings and the significant problem that you solve for. So thanks for your time.
Great. Thank you, guys. Appreciate being here today.
All right.
Thanks for all the great questions, James.
Thank you for listening, and do not forget to subscribe, as well as visiting www.watertowerresearch.com to stay up to speed on the WTR on the Horizon written research reports, podcasts, fireside chats, industry-specific symposiums, and conference schedules. We will see you next time for another edition of WTR on the Horizon podcast. Finally, a special thanks to the producer and editor of the podcast, Krista Fitzpatrick.